All right, and welcome back for the episode of This Week in Charts via Carnivore Trades and Wall Street for Main Street. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on CarnivoreTrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it this week. So doing this video on Monday here, so I just had my account merged, my Thinkorswim account, so I didn't have my charts over the weekend, so I'm doing this video obviously on Monday here. There was lots of talk today too of not just Thinkorswim and Schwab mergers, but there was some outages I heard with E-Trade. A lot of that going on with the GameStop squeeze. It seems to be speculated on. Obviously, everybody by now knows Roaring Kitty back on Twitter, and that's all he did was just post a picture, and big squeeze there for GameStop. AMC also up 47%. It's hard to tell because of how skewed the chart is and how much it's fallen. But we're seeing meme stocks run here a little bit today. But again, over the weekend, we had that merger, so I'm doing this video on Monday. But in any case, last week was very quiet action-wise. Again, I talked about that. Not a lot of economic data. We did have a few bond auctions. Both of them went okay. That was 10s and 30s. Both of them pretty much went okay. Jobless claims did beat to the downside, which markets did like. We can see that gap higher on Thursday, Friday, or Thursday really, that rally. And then on Friday, we also gapped up and just kind of put in a little doji candle. But we did clear some resistance. We talked about 5,200, that being a major level for the SPX. The only difference is there's a little difference, and it's just in the ES. And you're going to see here, actually, let me flip back. So I'll just use here's the SPX. You can see we cleared the 786, which is really that last fib target, and it kind of coincided with that gap fill. It's the last fib target there. But on the ES, because we have a higher high in the pre-market on the 1st of April, we actually are into the 786 right now, and we're actually backing off of it a little bit. So at least in that front here, the futures are a little bit less bullish, but markets did have a good recovery. Bears did not really do enough here to push us down off of either the 618 or the 5200 handle, and we're kind of just floating above that right now. It is Monday here. Markets are backing off. I kind of predicted a red day today, just based on the fact that we have PPI tomorrow and then CPI Wednesday. So when the market is 230 points off the lows in about 6 days, and then you go into a volatility event where we haven't had a volatility event in over a week, you're going to see some hedges go on. Take a look at the IWM selling off pretty nicely. Take a look at intraday here. You're going to see the markets, gapped higher, but now just backing off slowly, right? Slowly backing off here. The volatility index is up a little bit today. A lot of that, I think, is rolling over to the next contract, but you can even see intraday, it's gotten a little uptick here as we get into the afternoon. So PPI, CPI tomorrow. My guess is even if they beat, I think risk would be probably to the downside a little bit. Just because we have priced in a very dovish move. And you can see here bonds also getting a pretty good uptick last week. Although they did come off the highs by the end of the week here, to be fair. So again, if obviously we get a cool number that's bullish for markets, I'm not so sure that lasts though. Again, just based on the size of the rally that we've had here. So perhaps a pullback week here could be in order. But again, until OPEX is over, which is this Friday, I would expect the markets to mostly hold up. After that, I think you could go into a little bit more of a risk period. But again, markets had a pretty good recovery last week, and obviously the next big technical level is the all-time high at 52.64 if we do not pull back from here on the downside. 51.25 to 5100 are good dip levels there for the S&P 500. We did see some so we talked about the yen last week, and we've been talking about it every week really, but we saw some Forex intervention, and that was confirmed. So dollar yen did get a bounce here. They did not intervene last week. It was the week before, obviously. But this is starting to continue to bid up. And you can see here that that was confirmed. Now, notice the wording. U.S. Japan reportedly agree on Forex intervention. But we did not see really we didn't really see yields come down, right? So we just talked about bonds getting a bid. That means it's now speculated that it's likely they're doing currency swaps. So hey, what can't currency swaps fix? I guess But that's kind of the speculation right now. Last night, China did agree to sell, I think, 160 billion securities of U.S. holdings. So there's that in play here. Again, chart's not really reflecting it right now. The TLT is green. But just some interesting stuff going on. CPI, PPI tomorrow, and then Wednesday will be kind of the the movers this week. So that's what we have to look to. Again, those levels again, 5100 on the downside to 5125 for the SPX, and then obviously the all-time high are the levels there. Triple Qs here. We're up about 13 cents right now, but still backing off of the highs. And again, same thing, but they did not close above this red. So take a look here on the weekly. The Qs were slightly weaker. We didn't close above that red bar by a very fractional amount, but it was still there. And you're also going to see the semiconductors, very important leading industry group, did not do that either. And additionally, the semiconductors did not get above the 618 or not close above the 618. So again, little weakness there in technology, and that's a leading indicator for me. So something to keep an eye on there. Overall, market's been holding up though, and we did get a nice counter trend bid this week. So again, we'll leave it at that. The IWM here, again, had a pop last week as well, though it's much more rate sensitive. It was down substantially on Wednesday when bonds took a hit, but again, it's backing up, back up the charts right now and kind of trying to consolidate beneath this gap fill. If it gets through that 210, if it comes back down 200, are your short-term levels there. And then the Dow had the Dow was the strongest index last week, filling the breakaway gap here from April 1st. Still not at an all-time high, but it is very close, and it's not that far away. Next level is whole round number of 400. They never got there before. They got really close, got up to 398.06. 398.82. And then we backed off, and now trying for another higher low here on the diamond. We talked about the semis, but the SMH here again just kind of consolidating beneath that level, but still showing a little bit of laggardship last week. IGV also on the weaker side, still has a bear flag look here on the daily and even on the weekly. So again, technology is still really the weaker link here, which is ironic. That's not been the case really for the last 18 months or so, but it has been the laggard here in favor of banks, believe it or not, which we'll talk about in a few minutes here. The Dow Transports again finally getting a higher high last week, and today we just went up into 15.8, and now a little bit of a pullback there. I still think this is a laggard sector. I'm not a fan of the chart, but they got a bid here in the past week, and we'll respect it for now. The 2-year yield here, so interest rates are holding up nicely, and I'm not really in love with that. I wouldn't even call this a bear flag here, honestly. Especially if we look at the weekly, this is still fine. So again, yields are still managing to hold up okay. Again, this will get moved tomorrow, but the big line in the sand here for the 2-year is 472. It close below that would negate that green bar. But again, CPI, PPI in the next 2 days will tell us a lot more. It's when you go out to the longer end of the curve that the chart gets a little bit weaker. And if the 30-year inches down, I expect it to go back to this trend line right here, which does coincide with that 200 moving average. So we'll watch that. And again, 475 to 485 is the big resistance there on the long bond. So, but right now yields are holding up. We'll leave it there. XHB got a bid as well, but again, look at this trend line we've been following here. It backed off of that, and then it's been able to grind higher and put in higher highs and higher lows, but it's still been, this line has acted as a resistance. So if we do come back down, we'd expect it to go revisit this lower line. So we're just in this nice little channel here. If it can break out, I don't think it has really much trouble getting back to all-time highs. Maybe you have a speed bump at 110, but 112 is not that far off from there. And then VNQ here also had an outside move, but still struggling with that level I gave you. So right around 83 and change, I talked about that as being resistance, and that's where we're stalling out. And the 50 moving average, you can see, is right in that vicinity as well. XLF here down 9 cents today, but that had a good outside week. Again, this is probably the best point here for the bulls, is the fact that banks are holding up really well, and they've just been on a tear lately. So again, we tested 42 today. Now we're pulling back here again. Short-term support around 41, 41.20, and then $40, and then obviously the all-time high here. Or not? I don't believe that's an all-time high actually. Oh no, it is. Yeah, Yep, so it just is an all-time high on the XLF, right above 42.22. So those are the levels there, but banks are holding up well. Take a look at the KBE. That's new 52-week high there. So this is knocking on the door of that 48 handle. If it gets through that, I mean, you got 50 and 52. Very good inside pattern. It's been consolidating for a long time here. So large banks are looking all right. KBE is in better shape here than it was previously, but still has a lot of resistance up there with that gap. But you know, the chart's holding up much better now, and then broker dealers here also acting well. It's overbought on the monthly, but outside of that, it's holding up okay. Flipping over to oil here. So oil holding up all right. It did take a little bit of a dip on Thursday. We did play this in the trading room on the long side, and got in, you know, around the middle of the week here for a good little quick trade. I think this can still get up to 81, maybe 80.50. Right now, I just don't have a great read on oil. I do know that China's devaluing the yuan definitely puts some pressure or upward pressure on the price here. Take a look at the FXI. This has been on a tear. This has gone way higher than I thought it was going to go. And again, that turned out to be one of my better calls earlier this year in January, starting to go long on China here as there was max fear in the market. But FXI having a really good bid. You can see the Shanghai Composite here as ETF, also still holding up. Very nice bull pattern there for the Shanghai. I believe BABA has earnings tomorrow, by the way. But yeah, nice pop there. But in either case, oil holding up. I'm still kind of neutral on it right now, near to medium term. But I would say 81 here. 81 to 82, you know, is doable. If this level breaks, you're going to the low 70s. So maybe 73, 74. And then I think that's that also could be a tradable low there. XLE here, down 55 cents today, still inside of this channel. You could make a case that on the weekly, this is kind of a bull flag. I don't like how you close below that weekly breakout bar though. But it's holding inside of this channel, and it's hanging in there okay. It's down a little bit today. XOP also attempting a lower high as well. And then OIH, I like how OIH closed the week back above 320. That's a positive. But again, still just grinding around here. I think these energy plays are just doing some backing and filling right now. CCJ, basically kind of just it's still kind of just chopping around here on the weekly. We had a green week last week. This is about ready to go, though. I think maybe one more week of consolidation, this can break out. The same thing goes for URNM, again, getting back above that trend line, and now just kind of consolidating here. I think one more higher low here could push it back up as the URNJ. Nat gas here had a pretty good bit. I lost, so my chart looks a little funky here. There are still problems with Thinkorswim currently, and I can't get the adjusted contract properly, but Nat gas had a good week last week, and it's still acting well. So again, good outside move. I think I had resistance at 240. Let me use the M contract. That's gonna be, yeah, there we go. So 240. So I just use the M contract for now, so the chart's cleaned up. 240, and then, you know, really in that 250 area on this. I believe this contract rolls pretty soon, though. I think it's next week. So just be aware of that. But Nat gas acting a lot better. It should trade up into June seasonally. That's just kind of the way it works. So I would say I'd say give Nat gas the upside bias for the next month or so. Dollar index here. Again, just kind of backing off last week, but still consolidating. No real problems here. Big wide range green bar, and if this holds up, it can go higher. It's really that simple. So dollar still hanging in there just fine, and levels have not changed on that. 105 is still a point of control. 104.50 still support below that, right around 104 even, and then there's a lot of resistance up here. 106 to 106.50, but if we can consolidate enough and firm up enough, it can go through that, and then you go to 107, and then after that, it's a lot higher if it wants to. Gold pulling back a little bit here today, but you know, still in good shape. If we look at kind of the intraday, you can see we went up. There's a lot of resistance up here around 2,400, and it is backing off that. What I do like is the miners, though. The miners making a higher high last week, whereas gold did not. So again, the miners, we're going back to where the miners are leading the metal, and that's been kind of a long time coming. And you're going to see here too, even just the gold price versus CPI. has a lot of catching up to do, and it's very close here to a multi-decade breakout. And you're going to see here gold versus CPI versus gold stocks. That's got catching up to do. Now, their earnings will not really show gold price, really until quarter 2. But we've heard some dividend hikes. I think OR, Cisco. I think they announced a dividend hike. We saw some favorable results here from quarter 1, and it's showing that like a dividend hike, for instance, and that's showing that they have confidence that price is going to stay elevated for some time. So, these are good signs here. Again, gold still same deal though. If we continue to pull back, I like it around 2,200. I still like GDX and Go AU. So they're still acting well. The miners are acting well, and everything looks good here. Just doing some backing and filling and consolidation. Remember, we went from 2,000 to 2,450 in 2 months. So it's going to do some backing and filling. We're not going to just go up in a straight line forever. But obviously, the bull market is still intact, and I think it's pretty early. So SIL backing off a little bit today. You can see there, but again, last week with the higher high, and same thing with SILJ. Platinum also making a higher high today. Finally got a higher high. I really want to see it get above this 1030 level, but we did get above 1020. It is pulling back a little bit. Might need to flag here as it's had a big run. You're going to see palladium as well, just kind of stuck in this range. That needs to get back above 1,000, but I love these alternate metals here as catch-up plays as well. Copper, what can you say? I thought this was a climax candle. I even called this out as a possible climax candle on Friday. Big pump and then straight back down. And look at this. Overnight held the double bottom and now a new higher high. So what can you say with copper here? Continuing to act well. There is a ton of resistance up here though. At some point it's going to fail here. Just look at this, this big zone here, right? You drag that across. There's a lot of resistance there. So just be aware of that. But it's holding up really well, and copper's been a powerhouse here. And if you want AI, you're going to need these metals. Bitcoin still holding up okay. So not a terrible pattern. It's trying to work. It's trying to curl itself back up. If it can get back above 65.7, just say 65.6, 65.7. You can, kind of repair this. Otherwise, you could put in a lower high and then it's down to 52. I'm hearing a lot of people talk about that though. So I don't know if 52 is going to be it, but right now, it's still just neutral to positive on Bitcoin. Lastly, we talked about it a little bit last week. Take a look at grains again today. ZW. Finally, I've owned wheat for a long time here, and finally starting to pay off. Actually, was finally able to get some profit taken on that today. This has been a trade that's like literally 7 or 8 months in the making for me. So nice to see this finally getting going up just under 5% today. Look at corn here continuing to put in higher highs. And soybeans still acting well. But ZW, the all-star today, this can go to 720 and a lot higher than that very quickly. So grains can get really, they can move when they want to. And I think we're finally here with wheat. But nice pop there. And again, grains still acting well. I know a lot of you guys ask me about these all the time. MOS, I'm still telling you guys 25. So you stop messaging me. I'm telling you $25. That's where you want it. But same thing, NTR is a little bit better here. And I think IPI is even better, but MOS at 24.50, 25, that's the big level you want to own it at. So I know I'm going to get a million questions about it. All right, anyway, markets here holding up for right now. Again, 5,200 short-term support. We have PPI, CPI tomorrow. Those will be focal points of the market this week. And then we have OPEX on Friday. So I'm not expecting a huge decline, but I do think we can see a pullback over the next week or so as the market has really priced in a lot here. That doesn't mean we can't go and make new all-time highs. It's certainly possible. The CPI could do that, but I don't think that they stick for very long here, just due to the market already getting a little one-sided as far as positioning is right now. Anyways, guys, gonna wrap it up here. You guys take care. Come find Jason on Patreon. Come find me on carnivaltrades.com. We'll talk to you guys all next week.